Thanks so much for joining us here on 9 News Plus. I'm Chris Bianchi, and today we're going to focus in on Bed Bath and Beyond. Yes, we're going to be talking about Bed Bath and Beyond. No, it is not 1995, but Bed Bath and Beyond is at the heart of another stock market roller coaster ride. The once dormant Bed Bath and Beyond stock saw its value spike by nearly 300% this month, August 2022 alone, with some potential GameStop January 2021 like vibes. This wild, absolutely wild stock market price rise and fall. For more on this crazy story, University of Denver Professor of Finance Chris Hughes joins us now. Professor, thanks so much for joining us here on 9 News Plus today.
Of course, the stock price of Bed Bath & Beyond has been on a epically wild ride.
Yes, I think that's to say the least. And once again, mentioned that 300% spike here. Professor, I guess the obvious initial question about this is what exactly is behind this wild roller coaster ride of pricing here?
The long-term story for Bed Bath & Beyond is a really challenging one. People used to shop for at-home goods by going into a retail store, going into a bricks and mortar store, and they're increasingly shifting to e-commerce. This is very challenging for Bed Bath & Beyond, especially during the pandemic when they tried to change their business model by introducing more private label goods as opposed to nationally named brands. And they had supply chain issues like so many other retailers during the pandemic. And so they're really struggling to get a business model that works for having the stores that they have. However, what's been happening in the short run is that a billionaire investor named Ryan Cohen bought 10% of the company 5 months ago. And this week, he sold his stake, his entire stake in the firm. People were hoping that he would change around the business model and introduce some changes that would get the stock price back up, get them to a viable long-term business model. But with Ryan Cohen selling out, a lot of people basically bought the stock hoping there would be improvements, and they've seen the stock price plummet. It's down 40% as of today on Friday just alone. So it's been a large decrease.
And is that decrease between Thursday and Friday that you mentioned, is that entirely because of Ryan Cohen selling his stock, or is there something else behind that?
Because of the challenging business model that Bed Bath & Beyond has, a lot of people had sold the stock short. In other words, they were entering into positions in hopes that the price would decline. In fact, as of earlier this week, about half of the shares had been borrowed associated with short sells. Well, remember that with a short sell, you have to ultimately buy the stock back. And a lot of the price started going up. People got nervous about their short positions, and they decided to cover the short positions by buying the stock. And that caused a tremendous price spike associated with it. Unfortunately, a lot of small investors are going to end up on the short end of the stick associated with this. A couple of days ago, there are probably some small investors who bought this stock at about $30 per share. And they were hoping that Ryan Cohen, again, a famous billionaire who founded Chewy.com, was going to turn around the business model. However, today, the stock's trading at about 11 after Ryan got out and sold all the shares. And so unfortunately, a lot of investors are going to be hurt by trying to ride his coattails.
So when you mentioned the short stock, and again, just a random person here, so my expertise is going to be limited on this. If I recall, that has some of those GameStop-ish vibes from early 2021 when GameStop's stock rose very, very precipitously in the manner of a few days, few weeks, in some cases there. Is this related to that, or is this simply because of what you mentioned with Ryan Cohen coming in and then dropping his share of the company?
I would call this the same song, different verse. There are a couple of big names out there that are experiencing stock price fluctuations like this. There's been GameStop, there's been Bed Bath & Beyond, and there's AMC Entertainment. They all share a very common theme in the sense that as our economy evolves, all of these business models are really struggling. In the case of GameStop, they sold video games in brick and mortar retail stores. These days, there's a movement towards just downloading the game over the internet. And in fact, a lot of big players are kind of pushing this trend. GameStop is competing now with companies that are offering online video game service. Microsoft, Amazon, Netflix, Google. Nobody wants to go up against these big names, and they have a very challenging business model. The same thing with AMC Entertainment. They own movie theaters, and during the pandemic, people were reluctant to go to movie theaters. And Bed Bath & Beyond also is facing challenges as people are shopping more online. So it's a very similar story where a lot of investors have bet against the stock price by taking short positions. And a big investor comes in claiming to change around the business model and revolutionize the company. The stock price skyrockets and people buy the stock to get out of their short positions, and it causes a price spike that's called a short squeeze.
Is there any way, Professor, for regulatory agencies to perhaps limit this or control this in any way?
There are ways to do it. Unfortunately, I think that some of the regulations we actually create more problems than they actually solve. In a free market economy, we want big investors to come in and try and implement changes when companies are struggling with their business model. So can be a good thing. But what we've seen with Ryan Cohen is really not a great thing for the economy, even though Ryan probably made about $60 million on his investment. When a big billionaire buys into a company and then 5 months later he exits it, there's very little change that can actually happen. There are a couple of lessons that I would like to impart to small investors who are trying to make money off of this. It seems like a really easy way to make money. Just follow what Ryan Cohen's doing. He just made 60 million probably. The problem is you need to do your own homework. And just because Ryan Cohen is a billionaire and he's investing doesn't mean that you should invest as well. He has a lot more sophistication, a lot more resources to analyze the company, and the ability to get in and out of his investments that small investors don't really have. So it's a very tough game to play. The other thing is invest for the long run. Investors should have at least a 10-year horizon. Buy a company that you're confident has a successful business model that's going to be around in 10 years. I personally don't think GameStop is going to be around in 10 years. I could be totally wrong. I also worry about the business strategy associated with movie theaters, as well as companies like Bed Bath & Beyond that are so focused on selling just in the store and don't have a successful e-commerce strategy.
So with that said, I guess maybe an analogy, and tell me if this is correct or not, would perhaps buying into some of those, I guess, lousier stocks, perhaps like GameStop, AMC, or Bed Bath & Beyond in this case, would that be a bit of a get-rich-quick scheme, perhaps?
It's very similar to buying a lottery ticket. You certainly could win big, and that would be fantastic that you do. But a lot of the small investors are going to be the big losers in this case. They've pushed up the stock price or bought the stock price when it's really high, and that has allowed Ryan Cohen and perhaps other big Wall Street investors to sell their stock to some of the smaller players who are actually buying it at the same time that the larger investors were selling it. So buyer beware in this case. You don't want to form an investment strategy by looking at a couple of exceptional examples like GameStop or Bed Bath & Beyond. You really want to invest for the long run, and a buy and hold strategy really is the strategy that's going to work for most people.
I kind of think back also to early 2021, not only GameStop, but some of those cryptocurrencies that blew up, like Dogecoin, where I think there were Dogecoin millionaires and billionaires and things like that, where I think, again, there may be a bit of a tendency, or maybe some of these stories that kind of tend to make it out into the media, perhaps make people think that that may be a possibility. But obviously, really good advice there. Any final tips or advice here, Professor Hughes?
No.
Just don't buy into some of these companies. No. It's fair enough. You offered basically everything there. So again, some of these companies that you mentioned, including Bed Bath & Beyond, which perhaps appears to be the latest victim in this trend. Again, maybe not a great idea to buy into some of these companies, and chances are you're going to lose your money rather than gain it.
Day trading is a very risky business, and some people have made money at it, but the vast majority of the people who are doing this are going to end up in the losing side.
Absolutely. Well, Professor Hughes, we appreciate your insight your valuable insight and your expertise on something that, again, has been capturing our minds here for the last couple of years, but specifically another example with the Bed Bath & Beyond roller coaster ride of stock prices. And I appreciate your explanation. I'm sure our viewers do as well. Professor Chris Hughes, who is a professor of finance at the University of Denver, thanks so much for joining us here on 9 News Plus today.
Thank you.